Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect, then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market has now just tested for the first time after quite a few months this extremely strong level of supply and resistance. From here, all this move to the downside was created. Again, here the market tested its zone and rejected it lower, and at the moment we just started once again testing this zone from which we could expect a rejection to the downside. Now, as we just tapped the zone, we could expect a little bit of a correction, rejecting the resistance, then a deeper test of the zone, and then the rejection higher. That is usually how these things play out. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market has just rejected the previous weekly resistance turned support here. This was previous weekly resistance. The market broke it to the upside with this candle. At that point, the previous resistance was turned support. The market retested it and started rejecting it to the upside. And at the moment, we seem quite overextended to the upside. And as we're overextended to the upside, we could expect a potential rejection to the downside for a correction after this impulse, because no market just moves in a straight line. You will always see corrections along the way, which essentially are what creates the uptrend, in this case, a series of higher highs and higher lows. As we have just seen the last move being an impulse, we could expect a correction before then more continuation for the completion of the weekly impulse correction and impulse pattern to the upside. Now, this correlates perfectly with what we have already seen on the monthly, because if you remember, just a few minutes ago, we spoke about how on the monthly time frame we just tested that monthly resistance, and we could expect a bit of bearish price action before then a deeper test of that level. So here on the weekly, that would essentially look like a correction before then the continuation higher for the completion of the impulse correction and impulse pattern to the upside. Now, if we take our Fibonacci from the low to the high of this impulse, we can see how at the moment the 0.32 Fibonacci retracement, which is the first Fibonacci retracement that you expect the market to create a correction to before then continuing higher, is at the moment exactly at this area. Now, why is this relevant? Because the 0.32 at the moment is lining up perfectly with this previous weekly resistance turned support. Now, this creates a confluence of support at this area that we could expect this market to want to test before then getting rejected to the upside. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we can see is that we just had the completion here of this daily impulse correction, impulse pattern to the upside, with the market creating a new higher high. By the way, I did speak about gold a few times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect a potential rejection higher, and that is what the market gave us. From here, I made another breakdown explaining all the reasons for which we could expect first a correction and then more bullish continuation, and again, the market gave us this. And from here, I explained why we could expect first a correction and then the rejection higher, and again, that is exactly what the market gave us. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what do we have and how we could be looking for the next potential move? Now, before we continue with our analysis from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing. Now, if we check the data for gold, we can see how with the last reports, net positions have been increasing. We went from having 64k net positions all the way up to having and a 50k net positions, with the last report showing 12k longs added on the institutional side of the market for gold. In fact, we can see how longs for institutions were increased from 209k all the way up to 243k, and shorts got decreased from 151k to 93k. So institutions are clearly on the long side at the moment of gold. So if here, for example, we will see that correction that we wanted to see on the monthly and weekly, at that point, from a daily perspective, that would as well be a very interesting pattern because it would create this M pattern here. Now, in general, after the creation of an M pattern, what you would expect is a rejection higher for the completion of the M pattern and the neckline, which is the previous support turned resistance here. So if we will actually have this correction lower, this candle here, this red candle here, is previous daily resistance turned support. And this would be a very interesting level, inside of which we could be looking for a potential reversal for the completion of the M pattern at the neckline in the market to provide the bullish continuation that we would like to see. So if we do get this move lower, how we could be approaching this potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard after you joined, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is definitely still time to join before the timer goes to 0 and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, then the offer will end anyway and price will go back to normal. So I really suggest that you take advantage of this directly from here. You can click on join now to gain automatically access with the email and password that you will create for yourself during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.